And at the AFEX commodities market, a total of 271,000 contracts were executed in the 9th to 15th, valued at 4.76 billion naira. For details, we are being joined by Michael Martins, portfolio manager at AFEX. Hello, Michael.
Hi, Ladi.
Good morning.
Good morning. How are you doing?
Good morning. Great to have you. Give us a rundown of the week's activity at the market.
Thank you, Ladi. So over the course of the week, there was about a 24.20 decline in the total value of transactions executed in the exchange, from around 6.28 billion to around 4.76 billion. However, with the number of contracts, there was about a 33.08 increase in the total number of contracts executed in the exchange. However, with regards to the number of deals, there was another decline to the tune of 7.94%, from around 63 deals to 58 deals. The AFEX Commodities Index, which is the ACI, inched up over the course of the week by around 0.27%, while the AEI, which is the AFEX Export Index, remained unchanged over the course of the week. With regards to volume, we noticed that there was a general decline in the total volume traded on the exchange over the course of the week, with ginger and sesame being the only exceptions. With regards to price, there was a 4.59% decline in the price of maize contract over the course of the week, and this was due in no small part to the central bank's maize aggregation scheme. Soybean over the course of the week posted another consecutive week of positive return to the tune of 11.34%, adding more than 2,571 naira to the contract value over the course of the week. With other commodities like paddy rice, sorghum, and sesame, they all posted positive returns of 4.33%, 2.67%, and 0.60%, respectively. With commodities like ginger and cocoa, they both remained unchanged over the course of the week, and the fair trade exchange traded commodity, which is our proprietary FETC, also remained unchanged over the course of the week. So that's by and large all of what happened in the commodities market over the past 1 week.
All right, Michael. Now, the National Bureau of Statistics just released its inflation data, and is there any correlation between the commodities market and inflation?
There's a fair bit of, if you look at the historical data, it would suggest that there's a fair bit of correlation between both the inflation rates and the commodities market. Particularly at the firm, we tend to monitor these prices on a daily basis. And when we compare the ACI, which is the AFEX Commodities Index, which is like a proxy for the grains market, which comprises of maize, soybean, paddy rice, and sorghum, we noticed that there was a strong correlation between the ACI and particularly the food inflation. So what does this mean, essentially? It means that if you're a retail investor or you're an institutional investor and you're currently invested in the commodities market or are looking to invest in the commodities market, the inflation rate acts as an excellent indicator of what has happened in the commodities market and what is most likely to continue happening in the commodities market.
Okay, so we noticed that there was a significant surge in the price of soybeans over the past 2 weeks. Is there any particular reason for this surge?
So there is actually, and what you're currently seeing in the market is symptomatic of, historical buying patterns of the major off-takers for soybean. So ideally what you'd see in the commodities market is most of these major off-takers would take positions in the month of November, which is when harvest is. But it's almost impossible for them to take positions for their entire inventory needs for the course of the year. So around the month of February, going on March, is when you usually see their reintroduction into the market, causing the recent price surge in the price of soybean in the market.
So what is your forecast for the rest of the week for the commodities market?
So say for maize and all the other export commodities, ginger, cocoa, and maybe even sesame, I expect all other grain commodities to continue that trend upward, which would indicate what usually happens in the commodities market over the course of an entire season, where you have supply reducing because harvest is complete, and then you have demand overshadowing supply. So I expect to see the prices continue to trend upward over the course of the entire month.
Okay, thank you very much, Michael Martins. Well, still on the AFEX commodities, AFEX successfully issued a 25 billion naira asset-backed commercial paper. The commercial paper, which was listed in the fourth quarter of 2020, was 20% oversubscribed and was the first ever warehouse receipt-backed commercial paper listed on an exchange in Africa. Let's learn more about this from Oluwafunto Olashemo, Market Development Manager at AFEX. Thank you very much, Oluwafunto, for joining us.
Thank you very much for having me. Good morning.
I'm so sorry you had hard time getting here, but thank God you were able to make it. Okay, in the fourth quarter of 2020, AFEX launched Africa's first exchange-floated agriculture asset-backed commercial paper. You call it ABCP, right? What was the thinking behind this product, and why is it necessary at this time?
Okay, thank you very much, and very good question. So let me start by saying that as a licensed commodity exchange operator in Nigeria, our mission is to see how we can unlock low-cost funding, low-risk funding to participants within the agri value chain, and at the same time delivering a very decent return on investment to the financing partners. So if you understand the landscape of agriculture, you would understand that we're rain-fed agriculture, meaning we are one season for most of the crops. So there is usually this rush to aggregate commodity at the beginning of the season. However, there's limited funding available to the agro processors, and ordinarily a lot of these agro processors cannot approach the traditional corporate commercial paper to raise funds. So our thinking was, how can we securitize commodity, right, using the aggregated commodity as collateral, as the underlying asset, to reduce the perceived risk in the agri market and then inflow funds from the capital market operator.
Okay, you've identified a need for increased funding in the agricultural sector. Could you tell us what that gap is right now? So
if we look at the annual credit demand for the agri sector on an annual basis is about 2 trillion naira. And if we look at the current funding, whether from the government side or from the private sector, is around 600 billion. So there's a gap of about 1.4 trillion naira. And that is a huge gap. And to be honest, I do not think that that's a gap that only the government can fill the gap. So there's a huge opportunity for capital from the private sector, whether from the banking or the non-banking space. And the way we tend to do this is to see how do we create innovative products, right, that are asset-backed with minimal risk exposure to the investors.
And how can we collectively improve this reality?
So a number of things are actually needed to improve on this reality. First and foremost, there is this huge liquidity. If you understand the current trend in the traditional investment space, you realize that there is this decline in the return on the traditional investment vis-a-vis the treasury bill and bonds. So there's this huge capital that is within the capital market space that is looking for place to rest, right? So because of that, there's also a huge to create assets that are investable. So one of the ways that we can all make this reality of funding gap much more fulfilling or much more actualizable is to ensure that we create more innovative products that are asset-backed and offer a decent return on investment to the investors. There's also the place of regulation, right? So if you look at developed commodities markets, right, a lot of them do not trade on the physicals. They are heavy on derivatives and the rest of them. And there are regulatory framework within which the derivative market would work. So the government needs to create an enabling environment, right? So as we, on one hand, as a licensed commodities exchange, are creating innovative products that are investable, the government also needs to create the regulatory framework and policy to ensure that these things, there's a match between the asset side and the liability side, and capital can easily flow from the capital market to the agro processors.
So I see that the poultry and grain sector was one of the key sectors covered with the ABCP program. What are the projected outcomes of the financing on the Nigerian poultry market?
So again, understanding the poultry market is also very important. If you understand the way poultry farmers work, about 80% of their cost, their production cost, comes from feed mills and raw material. So our ability to provide them with low cost of borrowing actually significantly reduces their cost of production, which then ultimately means that they will become more profitable, right? The amount that we have raised, which is about 50 million US dollars, is actually small compared to what is needed in the market. But as we begin to increase that fundraise, that low cost of funding becomes available to poultry farmers, and the end consumer would actually benefit from it in the long run. There's also market transparency, right? You know, in the physical market, there are price war as to what the cost of these commodities are. As a licensed commodities exchange operator, we're able to provide that transparent market, that platform that provides for price transparency, so agro-processors can procure their commodity at fair value prices and not just be exposed to unnecessary hike in prices of the commodities.
Well, I'm sure you're aware of the recent, restriction of foreign exchange to importers of grains like maize, and we saw the issues that created amongst poultry farmers, and of course the feed millers. You know, so how would the commodities exchange and perhaps this ABCP, you know, cushion whatever effect their complaint or support these poultry farmers and feed millers that are complaining that, look, you cannot stop us from importing maize?
So if we look at our local production of grain production, right, you would realize that there's still a deficit in the amount produced versus the amount consumed. So that deficit needs to come from somewhere, which is going to be obviously from the import market, right? But the question is, how many of the poultry farmers have the ability or have the capacity to go out there and source for these commodities externally and bring into the country, looking at the exposure to Forex and the rest of them, which is the reason why we are saying, you know what, we can, for the small to medium enterprise poultry farmers, asset-backed commercial paper and other financial instruments can actually unlock the funding that they need to procure their commodity at the early stage of the season, so that they are guaranteed supply of commodity and raw material throughout their production season. They can optimize their production capacity, they can lower their production cost, and the end consumer is better off for it at the end of the day. So the import, in my own opinion, should be left for the big players that have international connection to do the export, while the small to medium enterprise should be financed locally by inflow of capital from private sector into the agro-commodity space.
Okay.
Yes.
Yeah.
Go ahead.
Okay, with the rising inflation rate at the moment, what would this mean for the ABCP?
So what that means for the ABCP is there's also going to be a pressure in terms of the return on investment that the financing partners are requesting for. Remember, these are private funds, and everyone that is investing their fund at the minimum would want to benchmark their return against what the current inflation rate is. So it creates that tension between being able to match what the financing partners are asking for as a form of return on investment on this instrument compared to how much the agro-processors are willing to pay as interest on the money being provided for them.
So what AFEX internal structure supports the success of this ABCP?
So one of the, a number of things internally that we've been doing actually supported the success of this ABCP. One of them is our ability to deploy a warehouse, an electronic warehouse receipt system and a collateral management system. Remember, I did mention that the asset-backed commercial paper is using the commodity as the collateral. Somehow, you need to convert that commodity into financial assets, which the agro-processor then add to his portfolio and upon which he can borrow. So our ability to deploy an electronic warehouse receipt system actually ensure the deployment of the success of this asset-backed commercial paper. Also, market data is very critical. As an exchange, we are sitting on market data, and that market data also help both the borrower and the lender ability to mark to market their exposure exposure. So if I have borrowed from a financing partner, for instance, and I'm using collateral as an asset, I need to know what the value of that collateral is per time, so I can know how exposed I am, and then I can know when maybe to make a margin call and to pull out of that transaction, because we also want to give that comfort to the lender. The borrower on the other side can also effectively manage their borrowing costs. So our market data was also very instrumental in the success of the asset-backed commercial paper. There was also a robust trading platform. So technology, for a commodities exchange like us, technology is very critical to the deployment of whatever operations and services we offer to the market. So we have a very robust technology system that provides that platform for the agro processors. So from the point of raising the fund to the point of disbursing the fund to the point of monitoring the fund throughout the tenure of the loan or the funding facility, technology has played a very critical role in the success of that.
All right, thank you very much, Oluwafunta.
Thank you very much for having
for
me.
educating us.
Anytime, it's a pleasure.
All right, thank you very much. Well, we'll take a moment now.